Ireland. So, Alan.
Thank you very much. Welcome everybody. Thank you very much, John and Brian and Richard beforehand. Very interesting presentations. I'll be talking to you today about Petroceltic International. My name is Alan McGettigan. I'm the Finance Director of the company. And the talk today will be focused on why you should invest in us. This is a sort of investor meeting. It'll be less on the geology and the geophysics and the technologies, but more I'll try and take you through our story and point out at different points of different places along the way why, as investors, I think you should invest in our company. We've seen this, Brian and Richard took us through it, so I won't go through it again. The talk is basically in three different sections. The first bit is the first three bullet points, the bit of the company, management team strategy. Then we'll talk about three investment areas, one in Algeria and two in Italy. And most of our time will be spent on the asset in Algeria because that's where the great value uplift is likely to come from. And then we'll finish up with a section on new ventures and news flow that we expect to have going forward. Petroceltic is it's a full cycle exploration and production company. In other words, we have capabilities from the very start in terms of acquiring licenses, working them up, all the way through to drilling wells and moving those wells on into appraisal programs and then on into production. We're founded in 2002. It was an old mining stock called Enix, and it was converted into a company called Petroceltic. Today, we have a market cap of around 260 million pounds, so quite an uplift from the previous two companies, but much of what they said is relevant for a company of our size as well. The company itself, although founded in 2002, it had a significant change in management in Q4 2008, Q1 2009, when they got a new chief executive, a new finance director, and a number of new board members. So there's been a big change in the capability set just in the last 2 years, and I want to talk to that a little bit. At the moment, we've got 30 full-time employees and over 50 experienced consultants. And by experienced, I mean these are people who have 20 to 25 years experience in the countries and in the areas that we're working. They've both onshore and offshore drilling expertise, and they work full-time for us as consultants. They're not employed as amongst other parties. We're headquartered in Dublin. We have offices in Rome, London, Algiers, and Tunis. If we go back to 2008, at the point in time of the change of leadership, we had a market cap of 28 million. So 260 today, 28 million 2 years ago. Our share price at that point was 3p to 5p. So the new management team has effectively driven the value of the company from 28 million up to 260 million in that short space of time. And that's one of the reasons why I think the people here today who are looking to place capital should consider us as an investment, because there will be more as we go through the program. Insofar as what we've achieved, the biggest highlight that we have today, and John, who I know from his Enterprise Oil days, has been talking to major discoveries in the 1 to 200 BCF gas volumes. The discovery we made in Algeria, which we've been working up since we acquired the license in 2005, is now looking at a sort of a P50 of around 6 to 7 trillion cubic feet, and on a P10 basis, this is gas in place, we're looking at north of 14 trillion cubic feet. So that's 30 times the size of the larger sort of 400 BCF discoveries. So a very large discovery in one structure, and IHS Herald Sierra recorded it in their end of year program last year as the 10th largest discovery worldwide in 2009. I think at that stage we had a market cap somewhere around the 120, 130 million. So you can begin to understand the asymmetries between the value of the company and the potential value of the asset. And it's the unlocking of those that is a journey that I think investors here today might be interested in taking part in. In 2009, as part of that discovery program, that was the second phase of discovery, we had drilled some earlier Devonian prospects on the block. The block itself, just to say a little bit, it's the size of half of Wales, and it's about the size of 18 or 20 North Sea blocks. So it's a very large area to license. I'll talk a little bit more about that in the next couple of slides. Where we are today, we're now looking at a 2-year appraisal extension. So we've been through our exploration phase, a phase of 5 years. We have 2 years to drill further wells. We're looking to drill another 4 wells, and we spudded on the 16th of November, so just a couple of days ago. I don't really want to be, Ewan's here today from Gulf Keystone, I don't really want to be the only person who doesn't have a press release waiting in the background for you, but we did make it at the time, so we spudded. We have a drilling program set for Italy, and I'll talk a little bit about that. It's not the main point of the story today, but that looks like it'll slip with legislation changes in Italy through to 2010. But some very exciting stuff there, and also just a completion and a sort of thinking cap on with regard to some wells that we just drilled in Tunisia. So very active at the moment, pushing forward mainly with the Algeria asset. Insofar as partners are concerned, we're carrying this asset in Algeria 75%, and it's 25% owned by our partner Sonatrach, who are also our regulator in Algeria. For those who don't know, Sonatrach are the state-owned oil and gas company, and they partner in pretty much most of the blocks that we have that are licensed in Algeria. We raised up to 120 million in April of this year, so we're fairly well cashed up. We have about 100 million of that at the moment remaining. We are highly confident of a farm out of some of this Isserine before the end of the year. That's really market driven as much as anything else. As you can see, we have enough funds to do a 4-well program. But a company of our size, on a project of this size, you do need to give confidence to the market that you can attract a major partner with complementary skills. We believe that we've done that now, and we'll announce that in due course. But again, as investors, you don't want to have a $260 million market cap company running a multi-billion pound project. And that's what this is going to look like. I'll run through these quickly. I guess to say briefly, all 4 of those people on the page there are in the company in the last 2 years. Rob Arnott, many of you would know, he was an analyst for many years with both Goldman Sachs and Morgan Stanley. He was a very highly rated analyst in the oil and gas sector. Prior to that, he was for 20-odd years working with Shell. Brian O'Cahan, former head of international business in Tullow Oil, and prior to that he was the founding chief executive of Afrin, so has been through this journey a couple of times before. Brian's the chief executive and came in January of last year. Again, Shell trained. Alan McGettigan, who's myself, I'll say a little about him. Ex-Shell again, ex-BP, 4 or 5 years in strategy with McKinsey and Company, Harvard MBA, but an engineer by training. Tom Hickey, who's an interesting hire, who you may, for those who follow the Reuters News Service, Tom was in Tullow from 2000 to 2008. Now, Tullow's market cap around then was around the 260 mark, and 8 years later, having done 2 or 3 transformational deals, the market cap was up around 10 billion. So Tom's joining us is, A, we like Tom, he likes us. We work well together. We've known each other down through the years. And we expect Tom to sprinkle his magic dust on the inorganic and organic levers